So good morning. Let's start with Algo module, day 1. So before we start, let me give you a brief on what we will discuss in this Algo module, and then how do we go about this. So the first agenda of this Algo module would be to understand the system or the architecture. The second part, after understanding the system or having an overview of how the entire algo system performs, we would basically go and understand how we can basically make these algos for execution. The most important part of algo is basically to get the best execution. Okay, so the execution templates is what we would want to discuss. Now, in this I have basically divided in different forms, and every section has separate templates. Okay, so we'll understand how this execution takes place. Third, we will try to also get an overview on AI or machine learning or neural networks. All these, you can say, the next technology which is going to get add on to algo systems. So this part, along with this, we will also understand HFT, right? So that's called high frequency trading, and how it basically works, or what are the execution techniques in HFT. After going through the overview of architecture, the execution templates, and understanding the OI, the AI, and HFT, both we will try to implement the same. And in implementing, our agenda would be to basically how this system of architecture of algo is created, and then how it is implemented. Now, for implementation, we have already explained in 3 parts, where we are taking the overview of system, execution template, and any of the methods. So these are a couple of methods, and you can also have, let's say, momentum strategy from technical analysis, or let's say you have some OI related option strategy or option pricing strategy kind of stuff. So all those strategies will basically understand how they are implemented. Okay, so the implementation part, where we will try to connect the data source, where we get the real-time API, real-time data from the API, and then how do we send out orders if our strategy or logic generates buy and sell signal. Right, so this will be the flow of these 6 days of algo module that we will discuss. Now, try to understand what will be the takeaway. Right, so before understanding or going inside this, your major takeaway will be first to understand how the entire algo systems perform, or how the algo systems operate. Now, if you want to understand the last part, where we will understand the implementation in the real-time world, but agenda would be, unless you do not know 1, 2, 3, you cannot go for 4, right? Because then things become way more complex. After this implementation, we'll be giving you some templates. I'll be giving you a template for machine learning, or even for AI, even for HFT, and you'll have simple strategies like option strategies or momentum strategies, which you can go live with. But after doing the implementation, I would suggest you to go and finish off the project, which will be designed, where it takes care of all of these, right? So if you are doing project, and even if you are doing it in parts, it's okay, because the project will help you to basically combine all your knowledge till now, right? So this is basically highly recommended, because we spend a lot of time, about 1 month, on capstone project. So this, I would suggest, if you want to take everything ahead, you should go out and give an attempt for the project as well. So let's start with the first part, the system or the architecture of algo stuff, which is being heard a lot nowadays. So first, before you go into system and architecture, let us understand what is this algo, or what is algo trading. In simple logical sense, algo trading is nothing but trading done by machines. Right? So in logical sense, it is nothing but the trades which are basically taken by machines. The second part is machine will do buy and sell, right? Rather than a person sitting over there and trying to place trades of buy and sell, machine will basically go out and trade buy and sell. Now, the most important part which people fail, people think that algo trading basically means machine will make money for them, right? Which is absolutely wrong. Why? Because machine will only do buy sell. That means they will do execution. Right? That's number one. Right? So they only do execution. What you need to understand, machines do not make profit. So machine only does execution. Right? So this is a false myth where people put a strategy and then they think machine will, I've created an algo system where machine is doing buy and sell and I should make profit. No. So what happens over here when machine is trading, please understand, the logic is given by the trader. Correct? So end of the day, if your logic is good enough, you will make money. If your logic doesn't work enough, then you will not make money. And again, since we are done in technical class or option class, if you have any logic, you can put it as a strategy, back test it, optimize it, see if it is working or not, see the equity curve, and then you go out and implement in the live market. So the point here is, algo trading is nothing but machines doing trading, right? So that's the foremost thing. And why we do algo trading, or why is this required? Because you have so many people doing trading on the manual basis. Why do you require machines to do trades, right? So this is the key feature, I would say, of an algo system or an algo trading. Okay. Yes, the logic can be different depending on all the traders. Okay, and how good the logic is, you'll get your result in terms of P&L. But all the purpose of machine is to do the best execution, right? So the perspective of using the algo system should be very clear. We are using or doing algo system is to get the best execution, right? So that's the foremost requirement, that this is why we are using algo system. The second part is to understand why you require machines to do the execution. Okay, so let's understand a simple example. If you wanted to buy Asian Paint yesterday, and Asian Paint is going up, but along with this, Berger Paint is also going up, and then suddenly the IT stocks started going up, TCS, or let's say Infosys and all those stuff. So what's happening over here? The same logic you are applying in Asian Paint, which is giving you a buy signal and you wanted to buy here, then you can apply the same logic on multiple number of stocks. So the agenda over here is execution you want as per your logic. But can I say you can achieve something called as scaling? So the same logic that you're trying to apply in one stock, you can now go out and apply in all the 4 stocks. Or rather than 4 stocks, from 5 stocks, you can scale it to 50 or even 500 stocks, right? So that's the main objective. If your logic is working on 5 stocks, why don't we scale it to 500 stocks? Now, why should you scale it to 500 stocks? If your logic is working on one, should we only trade on one stock? Yes or no? Why we are interested to scale this from 5 to 500? The reason is very clear. If you increase the number of stocks, the risk goes down. Okay, so the most important part of scaling is basically to achieve risk tolerance by the system, right? Obviously, you would want the risk to get diversified, okay, when you are trading. Now, try to understand, if you have huge sum of money, you cannot just trade 5 stocks. You might want to place it across 50 or 500 stocks. So this is like when you have a portfolio of 5 stocks or 15 stocks or 30 stocks, agenda is to achieve diversification, okay? And that's where your risk tolerance basically reduces. So the main objective of your machine trading is execution. So best execution that will help you to achieve scaling. And second, risk tolerance, where you would want to reduce the risk which you are taking on 5 stocks that can basically get moderated if you're going for 50 or 500 stocks. The third and the most important part of machine trading is, now if you are going out from 5 to let's say 50 stocks of trading, So scaling is achieved. And now the question is, if you're trading 50 stocks, it can be that you're trading Asian Paint, then you're trading Escort, and let's say then you're trading India Bull Housing Finance. Now all these stocks are not same. Correct? So one is having much more stability because it is large cap, and these two are high beta stocks which are mid cap. So now the question is, in general, the volatility in this stock might be around 2% max. But these stocks can have volatility of 3 to 5% also on the upper side. So the point is, if you are getting a good trade which can give you 3% or 5%, and in this also you are getting a trade where you can do 2%. So agenda is how much amount I should place in case 1 and in case 2. Once you understand something called as risk reward, then you should understand based on the RR, you should do your trade value optimization. Now, what do you mean by this? If I am getting a good RR, that means I am getting 2%, but my stop loss is 0.3% and I am able to achieve 2%. Over here, my stop loss is 1% and I am able to achieve 3%. Right? So the RR over here and the RR for Asian Paints are different. Right? So tell me, if your RR is only 1:2 or something, and here if you have RR of 1:4 in Asian Paint, if more is the RR plus the bet which you want to make is on large cap and stable stock, you would want to go in with a higher value of allocation. So along with the RR, you are also trying to judge the beta or the volatility of the stock, and based on that, you can do trade value optimization. How much money I should bet on the given stock. So example, let's say in terms of cash, if I have 5 lakhs in my portfolio, which I want to trade. Now, if I have a bet of good risk reward on Asian Paint, I might want to go out and put 3 lakh rupees on Asian Paint trade, and for these, I might put 1 lakh rupees, 1 lakh rupees. Because the RR is not that good, but the trade signal seems to be very robust. At least you're getting some good risk reward. So the point here is to achieve scaling. By achieving scaling, we are providing good risk tolerance to our trading portfolio. More than that, now what we are going a step ahead, where depending on RR, you are optimizing your trade value. So trade value optimization is the key in making money. Okay, so these are 3 prima facie importance of why we are going out for machine trading. Okay, so why are people mad about algo trading? It's not about machine will make money for you. It is mainly whatever logic you have given, you can scale it. Then by scaling, you are achieving risk tolerance. After that, if every trade that you're taking having a good RR, you can then dynamically change your trade value. Because at the end of the day, the last point makes a bigger killing, right? So if you can dynamically decide how much money I should place on this stock, or this stock, depending on RR of the opportunity, you should basically get the best optimized result. So mainly these are the 3 features. There are many other features, small features which are there of this machine trading. Just to highlight a few. One, as I said, you can trade on many stocks. The most important part is, in second, you have the best format of stop loss and target. So this feature is of great use because it removes emotions. So if you have bought some stock and kept 0.3% stop loss, and if you're watching manually, you might change the stop loss to 0.5%, correct? But in this case, if you have given it to machine, he will not ask you, what should I do? The stop loss has come, right? So he will basically trigger your stop loss, and then he will tell you the stop loss is triggered. And by doing this, human emotion gets kicked out, right? So that's one of the most important features of making use of stop loss and target, right? So that's the most important part of removing emotions, which is there, achieving to trade on many stocks, which is scaling and reducing your risk tolerance. Apart from these two, the system can basically work 24 hours around the clock. Right. So for us, if you're trading in equity market, it will trade right from morning 9:15 to 3:30. Now, even if you are not there on the screen, you don't have to keep monitoring the same over and out. The agenda would be he will create signals for you, he will trade it for you, he'll optimize as per risk reward, the bets are given, the stop loss target logic is assigned, he will trade and the output result will be obtained. So the point here is why 24 hours? Because normally algo systems are also applied in forex or in commodity, where the global markets of forex and commodity are on 24 hours. Right? So if someone who is basically trading commodity market and it is on 24 hours, you would not want to sit 24 hours in front of the screen. Okay. So the main reason is the system can basically work throughout the time period. Now the opportunity might come at the start or the opportunity might come at the end of the market. So the agenda would be system keeps looking out for best trading opportunity. So that's the key feature of working throughout the time period of the market hours. Apart from that, you have the stop loss and target assigned, and then you can also scale it to many stocks, right? So majorly these are the main features of optimization, and these are like the side, you can say the siders, which also adds a robustness to the system. So after knowing that, yes, this is what is algo trading. Okay, so the key feature over here of algo trading is basically to get your logic right, assign it to many stocks so you diversify, your risk tolerance of the system goes down, and then optimize as per RR. Okay, now the most important part is, can you tell me market starts at 9:15, market closes at 3:30. When the market starts and the market ends, the question is, along these hours, where do you find majority of volume getting traded? Or when is the active part of the market? Morning. Right? So the first point is, this is the active part of the morning, and sometimes the last half hour or 1 hour is the active part. And during this is basically the lull period, nothing happens. So the point here is, don't you think if you get an opportunity at the start of the market, size it up? Because if the market volume and liquidity is higher at the start of the market, you can assign higher trade value and the results will be obtained in 15 minutes or 5 minutes itself. Means your system goes in, takes a trade, in 5-10 minutes you are out of the trade. But here if you take a trade, your agenda is clear, you might be in the trade for 1 hour also and the result is not obtained. So the most important part is not to create a system. The most important part is to also know the nature of the market, right? So the nature of the market for equity market is start and end. Okay, and you should be very clear during the lull period, it might be that the stocks are not moving. Okay, so the most important part is to understand if the start of the part or the start of the market is more volatile, where like majority of volume takes place, it is better that you get in the trade and get out of the trade at the fastest. So it is very clear that my targets will be achieved, okay, in 5 minutes, in 10 minutes, in 15 minutes, that's it. And you are very clear my targets might be achieving over here, maybe in 1 hour. And if you have some opportunity at the end, you might be knowing that, yes, fine, my targets, if I'm taking a trade at 3 o'clock, you might get the results in 30 minutes. So the agenda over here, when you know the different durations, okay, of your targets getting achieved, don't you think this format will also assign a proper stop loss? Because these are called as time-bound stop loss. Okay, if you're trying to take a trade, it's very clear your target should be achieved in 10-15 minutes. So let's say if I buy at 100, and this is at the start of the market. I bought and the prices started going up, so 103 or so. What your system should do, when I put a stop loss, let's say at 99, the system should be very clear of trading the stop loss at the entry price. The reason why you should do this is because your stop loss is not there now. You took a trade, price moved up, after 5 minutes, trade your stop loss to your entry price. Then what happens? It might come down and the answer should come in another 2 candles or let's say 15 minutes. So the agenda here is there will be only 2 types of trade at the start of the market. Either the stop loss will hit, and the stop loss will hit in 1 minute, 2 minutes or 3 minutes, because the moment you take a trade, goes down, stop loss is hit. Second format would be you take a trade and it starts going in your favor, so that time stop loss will never be hit, because moment it goes in your favor, you are trading your stop loss to the entry price. So now what happens? There is no stop loss. And the third category is if you're trading it over here and then you get your result in 15 minutes, you always get the target achieved. Now let's see. If I am doing, let's say 100 trades over here right in the morning, let's bucket them in 3 formats. If you get, I'm not saying your target should be achieved. All I'm trying to say, if you pick up those trades where you enter and the price moves up. Let's say your logic is so clear that when I enter, the price starts moving up. The chances of price going down is less. If that is happening, then there are 2 cases which will happen 80% of the time or 70% of the time, that your stop loss will not get triggered or your target will be achieved. So the only logic that, whatever logic you want, let's say a stock opening above gap up, or let's say yesterday there was huge delivery on that stock, or let's say there was huge OI built up on that stock. Any feature, or there is a news right in the morning, the pre-volume is used. So any of those momentum strategy that you're trying to apply, the agenda should be when I enter, it should move, right? And it should move in my direction. And the moment it starts moving in your direction, then all your trades fall in this bucket. Okay, so the trade which will hit your stop loss will be around 20 to 30% of the trades which will hit your stop loss. That means I entered and the price went against me right then and there. So that means my entry points needs to be very, very clear, that we have not achieved yet a clear entry point, because the agenda is moment you enter, price should go up. If I achieve only that much, that my entry point is very clear, I enter and the price is going up 80% of the time, then you are sitting on a winning system, right? It is as clear as that. So the point over here is only to be very, very clear about your entry point, right? If you are very clear on your entry point, your majority of trades will lie in this zone. And if majority of your trades lie in this zone, there is no question that your system will make loss, because either your stop loss is not there, you're scratching your trade, or you're achieving your targets, right? And if you are having a stop loss, it's very clear, because my stop loss, when I'm trying to do, let's say, stop loss of 0.3% or so, and I always play a risk reward, let's say 1:3, then you're done, right? So this is very, very important to understand, that if your risk reward is assigned and your stop loss are small, okay, even 30% of stop loss cannot kill you. 30% of trades going in stop loss, right? So that's the most important thing to understand, that the risk reward, along with that, you are trying to bucket your trades in 3 fashion. Now please understand, along with bucketing of trades, you have clearly known where you are trading. Now there will be a complete ratification of these trades of morning trades. The second one will become your afternoon trade, and the third one will become your post trade, post afternoon a half session. All these will have different analytics. So that means your algo system based on time should change the strategy. Correct? So the point here is 2 important timestamps which we have noted and which we are trying to include in this algo system. All we are defining is the risk tolerance. How? By time of the market when you are trading, and second, time by which my stop loss will be hit. Can you tell me how much time will it take for stop loss to hit in case A, very fast. In not even 5, it will be even 3 minutes, 1 minute, a spike will come and you're out. But a stop loss to get traded in B might take a little longer, and in C, it might take again very fast. So what's happening over here? You are designing the system based on the nature of the market. Okay, and this is what the major difference which people do not understand. So let's say this is an intraday system. When you go out and you do a positional bet, even if you are taking, that positional bet has to be again be very clear from risk reward perspective, right? So we'll come to that, those kind of systems where, but these systems when you're going inside intraday and trying to trade, and these systems when you're trying to make, you need to understand the nature of the market, and based on the nature of market, your system should be aligned as per those features. Okay, so the question is very clear. If you know how things are progressing, okay, this way your algo system will take into account the time factor, and the algo system is very clear about how much time it can take to hit your stop loss. So that means if more stop loss are getting hit in the morning trade and less stop loss is hitting in the noon trade, that means we have developed a good system here, but the system is not working in the morning trade. So I need to now fine tune my system. So why is this feature important? Because we have understood major volume happens here, nothing here, and then again over here. But apart from that, you need to also know what is a day prior information on the market. So example, the markets can open in two fashion. Market has some news and it can open it with some kind of gap. Market does not have news, it will open flat. So now there are another two features which needs to be taken into account. If market opens with a gap up, don't you think your system needs to be acting very fast? What is to be done? And then if the market opens gap down, again it's a different scenario altogether. So you have now a preconceived notion as to what market can open. So market have three features to open, either in gaps or either flat. Okay, if market is opening flat, it might take any direction, either up or down, right? So again, what is happening over here? First screening is how the market is opening. Second screening is if it is opening in any of these compartments, 1, 2, or 3, gap up, gap down, or flat. Based on this, you need to apply what? Your strategy 1, strategy 2, or strategy 3. And on top of that, if you're applying strategy 1, 2, and 3, it also has to take into account the time factor or not. This is the opening part of the market. If you're applying strategy 1, then again it should, the same strategy 1 has to get modified in after, let's say, 10 o'clock, 10:30, or 11 o'clock or so. So what's happening over here? Can I say a simple logic will work everywhere? No, it never works everywhere. Okay, because there are other parameters, external force parameters, which one has to take into account when you're designing a system. So this sessions which we are trying to discuss over here are the points which you can use to develop your system. Okay, and that's very important, because just a logic, placing a logic and giving an order is not the answer to get the best system. Okay, it's way more beyond that, where you are trying to understand the structure of the market, you're trying to understand the pre-market of how the markets are opening. Okay, and the logic, trust me, has to be very simple. More simple the logic, the outputs what you are getting, or the quant output, or you can say the data analysis that you will do, will make much more sense. More complex the logic would be, you would not understand when we should apply what, right? So even a simple EMA crossover will work the best, right? But you need to understand that, okay, this is the simple logic, but what are the external forces? When does it work and when does it not work? It might happen that your system which you have designed might be working fantastic in flat markets, and it is not working